$100 XRP thanks to Mastercard's RLUSD deal due to the one-to-one backing with XRP? Let's dive into that today. Hi, Tarun Freestone, coming to you wherever you are out there in the world. If you like my content, please subscribe and like this video. It really helps me a lot as it pushes the YouTube algorithm and gets my content out there amongst the digital ecosystem to others. We'll be covering off the price currently, and then we'll be launching into an analysis of what is possible and tangible for the new deal of Mastercard settling in RLUSD. We'll touch bases on that through analysis that I have done, and then we'll combine that with the potentials, what will be coming down the pipeline from the ETF inflows, as well as touching on, understanding truly the assets that are in reserve and exploring other little quick whip-ups from the week that's been, I could say, which has been a swell week at that, excuse the pun, and also go through some of the full-length interviews for Brad's team and the entire ecosystem. Let's get into it. First off, we have the price today trading at $2.31 with some change. It's been stuck in this range that I've sort of outlined with the two trend lines. It was just based off a hunch that I had. It was all the way back in August 2024 when we had some price, March 2024, we had some price action which bounced off this, then came back and interchanged with it and then dropped down significantly. So I think we'll trade up the underside of this trend line before also repeating that move, possibly towards December. I feel like December could be a little bit down before taking off into January. But like everyone, we all just guess. Doesn't matter if your water's above crypto, doesn't matter if you're blockchain backer. At the end of the day, guys, we are literally just guessing, and you're eating it up, and we appreciate that. So long story short is we don't know, and we do know it probably will hover between 2 points of consolidation and price interest here at this purple line and this purple line. And I think that's between roughly $2.10 up to, I mean, if you want to get to the extremes of that, that could be $2.50, but more likely $2.43. So the $2.10 to $2.43 it should be sticking around inside of, with, vast, quickly sharp moving, liquidations or pumps up and down either way. I don't foresee too much going on in terms of everyone's predicting a pump November, pump December. I would love to see that. I don't have any crystal ball on that one. How does it stack up against the other components in the market? We have the S&P 500, which is, I think it was trading at around 6,700, 6,728. It's recovered down off the bottoms of 6,600, like I had previously indicated that I thought it would come down and touch this area, and I would feel strongly that you'll see a reversal. We will see, we're 37, 38 now. Good morning, America. It's 38 days down there. Trump is still at loggerheads with the Chuckster, and we got some serious issues there in the government lockdown going 38 days now. So I hope the American government goes back into session and we start to see some things push through there, especially the crypto market structure bill. Moving into a couple of videos which I encourage everyone to go look at these videos because they're fantastic. The first one here is Crypto in America. I've put it on double speed, so feel free to slow down this video if you would like. However, I can assure you that you will still probably get the gist of whatever Brad's saying to the panel here at Crypto in America. Let's have a read through, a playthrough of what he's got going.
Pretty unforgettable. We'll get into that.
$2 billion.
Oh my God.
$2 billion? Yeah.
Oh.
I think, yeah, that's just
Okay. Well,
absurd.
some absurd number.
Yeah.
You've had a string of acquisitions, which we'll get into as well. You've had applications in for a national bank charter and a Fed master account. Let's get into it. Brad, welcome to Crypto in America.
It's really good to be here.
It's really good to have you. We always ask our guests this first question. What does Crypto in America mean to you?
When I hear that, what I think about is U.S. leadership around crypto. And whatever you think of Trump and whatever side of the policy you may be, I think we all as U.S. citizens should care about U.S. leadership around crypto. And I think we have not been leading. And people who say we have been, I'm like, well, they take to zoom out a little bit and see what's going on. And the largest exchange in the world is not based here. I mean, there's a lot of evidence that would say this is not a U.S. leading industry right now. And I think people like yourselves are talking about crypto in America, and also the legislative priority that has shifted. Some of the policy stuff with SEC or CFTC has shifted. And I think there is an opportunity for the US to lead, and I think we should care about that.
Yeah. You joined Ripple as COO after a pretty extensive run in the dot-com era, big tech, all of that. Do you see similarities between the two? And then what really drew you into this space now that you're here?
I love this part.
I see a lot of similarities between the dot-com boom and bust and what's going on in crypto. So I moved to Silicon Valley in 1997. I got involved in the internet very early. Whole story behind that of in 94 learning what an IP address was.
I think it's really good to get a background on where Brad's coming from. I did reference Patrick. I won't keep stopping the video. I think it's very important to reference that Brad can't keep doing this forever. And to hear the last 1997, he got to Silicon Valley. So he'll be there for 30 years doing this hard yakka, hard work. Sorry, to our American, hard yakka. So I think it's time that he take, a rest. He's just gotten remarried. I think that the mantle can be given on to another. And I'm really impressed with Patrick Witt. So, you heard it here first. I think Patrick Witt might be in running to go into a cushy corporate job of CEO of Ripple as it extrapolates across the earth and permutates into all aspects of the institutional finance system over the next 20 years.
Which was, I still remember the moment kind of thing. And I think anytime there's a new technology shift, you get a lot of excitement about it. Understandable. People see the opportunity of, well, what if? And then so a lot of capital comes in, a lot of entrepreneurs come in. And in that case, in contrast to this, the US actually did provide regulatory clarity. And in 96, passed the Telecom Deregulation Act, which provided a whole bunch of structure for Al Gore to invent the internet. That's a joke, sorry. But I think that you had all this capital come in and kind of, frankly, the excitement got ahead of the reality, to be honest. Certainly that was true in the internet space. And you had the boom and then an aggressive bust. And I think there are aspects of that in crypto that have been similar. You saw, you guys have all been around this space for a while, and you certainly saw, kind of an ICO craze, an NFT craze. And that isn't to say that ICOs don't have some potential substance or NFTs don't have some potential substance. That the excitement got ahead of the reality and you go through these boom bust cycles. It, to me, feels different than the internet directly. But I think the excitement about how these technologies can be applied to make financial systems more efficient, certainly Ripple's focused. And people should be excited about that. But doing that at kind of a moderated pace as to what change management, particularly for risk-averse financial institutions, is something that we have to be thoughtful about. But it's one of the things I'm exceptionally excited about the next 10 years because I think a lot of foundation has been laid, and I'm sure there'll be other cycles along the way here. But overall, I'm excited.
Do you feel like crypto already had its bust then with what had happened in the past administration and all the cycles and everything in between?
I mean, the short answer is yes. Meaning, so I joined Yahoo kind of at the end of 2002, and people forget like Amazon also went out of business. Yahoo, I mean, people Yahoo suffered later on, but like this was a dark time in the world of the internet. Like, and now Amazon is what, I don't know how many trillions. I can't keep track, but one of the most valuable companies in the world. And so I think the crypto blockchain ecosystem has gone through a couple of dark moments. I'm not going to be brazen enough to predict we won't have other dark moments, but I would like to imagine that we have seen the worst of it because I think each one we kind of emerge a little bit stronger, a little bit smarter. I think I think frankly even some of the less good actors get weeded out, and I think that happened in the internet space. I mean, there are definitely charlatans in 97, 98, 99. They get washed out, and by the way, some of them did go to jail, right? Like that happened, and now we've seen that in crypto, and I think as much as I don't want to see that in any industry, that we've seen this movie before, and if you think about how the internet ended, it took. So from 97 to today is 28 years. Okay, so if crypto was born circa 2010, 28 years, so that's 2038. Yeah. We got a lot. We got a lot of growth.
I think that's better than a price prediction for Bitcoin. I like that. When have we made it? 2038. I like the analogy a lot because we're fond of saying like Chewy is really just like pets.com with like better infrastructure, like more capital, right? Like
Webvan. Yeah. I mean, the number of Webvan was heralded excitement. I mean, there were billions that went into that thing. The CEO of Accenture went to run it, and there was so much excitement. Wrong place, wrong time, and now we got 4 Webvans between DoorDash and everything else.
Yeah. And I want to get back to what you guys are building now at Ripple, but more recent events, you were very vocal about being critical of your treatment under the SEC, the last administration. I'm going to misquote you a little bit. I think it was something like ambiguity creates the guise of power, something like that. It's a great quote.
I like that one. I can't remember. It wasn't quite that.
It wasn't quite that. But so, you guys fought the fight, you went through and you got vindicated by the court. One of the few under the last administration to actually get some vindication from the judiciary. Now that sort of era is over, where do you see Ripple going just with this new kind of regulatory clarity? And I'm sure that has a lot to do with what you guys are building now. Yeah. I mean, it's almost shocking. And Ellen and I were talking a little bit before we got started. 1 year ago today, we happened to be sitting here, in an election week. 1 year ago today, Ripple was still being sued by the SEC. That we'd won, but then they were appealing. The crypto market and certainly XRP was perhaps had some downward pressure on it from that regulatory dynamic. And so I think, it's around 40 or 50 cents today. It's, I think, 2.25, something like that. You can't really overstate how profound that change has been. Now, you can also say, people forget, before the SEC lawsuit, before the SEC came in, kind of, in my opinion, artificially manipulated a market, XRP was the second most valuable digital asset. Today it's 4th or 5th around there. And, I think that creates, a challenge for the XRP ecosystem and community to keep building and, demonstrating how these technologies can be applied in ways that create demand and velocity for the asset. So, I mean, really, I don't think I can overstate how much has changed. You're exactly right. One of the things, I believe we're on the dawn of another positive wave. And I think that's driven by the simple reality. The largest economy in the world went from being pretty darn hostile towards crypto to pretty darn friendly towards crypto. And so you have 22% of global GDP just flip-flopped. And yes, markets have generally done well in the last year, but I think they still appreciate how much that largest economy shift means. This morning, Adina Friedman was on stage, CEO of NASDAQ, with Monica Long, Ripple's president. And she talked about the banks are still nervous. And the banks in the United States don't yet have the clarity they want to fully lean in. Now, stablecoins, I think they would say, yes, the Genius Act provides that codified clarity. But there's other pieces of this that, because the Clarity Act is stymied, you guys are probably more experts on the status of that than me.
But I think the big banks are still nervous. And again, back to what's changed. It wasn't that long ago. I personally was debanked. That's like, this is an example of weaponizing. And there's like, a lot of the conspiracy theorists I read, and it's like, well, it actually did happen. That's not a conspiracy theory. Like, I was a recipient of that.
Yeah, I remember a lot of those kind of Nick Carter moments on Twitter. Like, I was right. Like, you guys thought I was. Yeah. Very interesting time. Yeah.
But you've come such a long way in the last year. I mean, since sitting down with you at Swell in Miami, we talked about all that stuff. I'm just going to rattle off some things that Ripple has done in the last year. So buckle up. Obviously, you guys launched a stablecoin. You acquired a payments platform, a treasury software provider, 2 custody platforms, and a prime broker, applied for a national bank charter and a Fed master account. Does this mean Ripple ultimately wants to become a full-service financial institution? And if not, what's the long-term vision for Ripple now?
It's a good question. I mean, it is, as we said, profound how much has changed. Ripple has, I think, in a happy way, always focused on a particular segment, and that is really on the infrastructure side. There are temptations that we have had along the way of entering other segments. Some interesting consumer applications that I found interesting. And frankly, look, the exchanges have done well. Coinbase has done well, Kraken has done well, Binance has done well. We have resisted the temptation to kind of move into some of those segments to stay very much in the blockchain infrastructure for businesses, for financial institutions. I will say, there's a whole bunch of things we've done I'm very excited about. I think, again, people underappreciate how consequential acquisitions like Hidden Road, which is now Ripple Prime. These guys cleared $3 trillion of transactions last year. And when you think about how, some in crypto, I think, are looking at, I'm going to buy other crypto companies. If you look at Ripple's behavior, we're actually saying, well, we want to be the bridge between traditional finance and the decentralized finance world. So we're the decentralized finance piece. We're going to acquire things that are traditional finance. Hidden Road was kind of 80% non-crypto related. G-Treasury is 100% non-crypto related, processing trillions of dollars of payment transactions. And so the opportunity to bring, over 1,000 corporate treasury offices, managing hundreds of billions of dollars of dormant cash, and think about how you apply that with stablecoins. I think I'm incredibly excited by where we've found ourselves in that journey. And I think next year I will say I think we'll be much less acquisitive. We've been busy this year on the M&A front. And I think it's kind of like, okay, we got some work to do to integrate and to demonstrate the strategy that we see as like just kind of articulated. Okay, let's weave these pieces together.
Yeah. On the front of Ripple Prime, you obviously acquired Hidden Road, and that went live, I believe, on Monday.
Yeah, well, pieces of so now that Hidden Road is now Ripple Prime, and we operate all as one licensing regime. There's things that Hidden Road can do in the United States that they couldn't do before, and so they now are clearing XRP as well as RLUSD in the US, which because of licensing stuff. And now that we're kind of one big happy family, we can do that.
Yeah.
I can't wait to get into the deep dive analysis, so I will pop it there. There is still half of the interview left in Crypto in America. I'm not associated with these guys, obviously, but to get a one-on-one sit down where you've got Brad for half an hour is just gold, absolute gold. So appreciate Crypto in America doing their journalistic due diligence. Let's launch into Patrick, who I've got to do this one more. I know we've touched on this already in some of the content, but it is very timely to see someone of this caliber in the space for the government, and it really ties in well to explain away the last year or so of coming from what we were 40-60 cents, and now we're at $2.30 today. I've been up to $3.80 on some exchanges, $3.90 if you're on KuCoin, which is a smaller Chinese exchange. It's no financial advice given, but that's sometimes where I trade, and have traded. So yeah, let's just launch into what Brad and Patrick do speak on. I'll slow it down a little because I can't express my amelioration.
The hot seat for sure. So before we do that, I just want to take a minute, and this is the 9th swell, which the very first one that was in Toronto. We have come so far from maybe 100 people was in a warehouse on the outskirts of Toronto. But in addition to acknowledging some of the stuff that Ashish pointed out happened overnight, earlier this morning Ripple announced a $500 million investment from led by Fortress and Citadel, some of the biggest names in finance. And so although we're not talking about that today, at least I wanted to acknowledge that so that people are aware that we're not just ignoring it. It is nice to take a moment to see kind of how far we've come.
500 million.
So Patrick, we're excited to have you here. I was talking to Patrick backstage, and I thought it would be interesting to start because you're sort of new to the role. It's been a few months. Give us your journey. Like, what was your path here? I know you were with the Department of Defense for a minute, but both in government, even before that. How did you end up in government?
Yeah, so my background was a college football player, very briefly in the pros with the Saints,
Yale
and then after that, went to law school, was a hedge fund trader prior to law school, then briefly with Credit Suisse as an M&A banker, came out, went to McKinsey, so I was in the business world and had an opportunity. Was approached by a friend that had joined Trump 45, the first term, and asked me to come into government, and so.
That is the most insane rap sheet. I still can't get over this guy. So he was Yale College quarterback, New Orleans Saints quarterback for a brief period of time. Then he went into M&A for Credit Suisse. He was a hedge fund trader prior to that. Then he's gone into run for, the campaign behind Donald Trump's 2016 campaign. It reads like a movie.
So I served for the last year of the Trump admin. After that, ran for public office in 2022 with the president's endorsement. And my former boss.
I didn't know that. Where did you run?
In Georgia.
In Georgia.
Yeah,
Nice.
from Atlanta, Georgia.
Yeah.
And my former boss in the admin, a guy named Mike Regas, who's now the number 3 at the State Department, Deputy Secretary of State for Management and Resources, when things were heating up, getting closer towards the 2024 election, asked me to get back involved if I wanted to rejoin the fight. And so joined the team at AFPI initially, and then we got tapped to be the official transition team. So moved to DC and then down to West Palm Beach where we ran the transition, and was down there from day one, standing everything up. Very exciting experience. Nothing quite like it, running a presidential transition.
I can only imagine.
And my colleague, Michael Friedman, who's actually now the Chief of Staff to Secretary Bessent at the Treasury, we kind of divided up the world, of the different agencies. And so he took the economic portfolio because he had worked on the 2016 transition with Treasury, and I took all the NatSec agencies. So I was managing Department of Defense, Department of State, DOJ, the intelligence community, and during that time also, Bo Hines, my close friend and also Yale football player, was down there basically crafting this idea for this office for digital assets within the White House, kind of modeled after what Jared Kushner had done with the Office of American Innovation in Trump 45. And so the plan was for me to join Bo, and we would go in, work under David, and stand up that office. Well, as things kind of happen in the initial days of the admin, and it takes a little while to get folks on board. And in particular, that White House office needs to run like a top. And so their focus is on the core, right around the president, with all the executive orders that we had drafted up during that time down at West Palm. That was the focus. And so, for me, wanting to start on day one of the admin, the Department of Defense, now Department of War, asked if I would join their beachhead team rather. So went into the Pentagon on January 20th, was sworn in, about 30 minutes after the president took his oath, and in short order got pulled up to the front office of the Undersecretary of Research and Engineering. So most folks know it because it oversees DARPA, the entire Defense Science and Technology Enterprise. So the initial plan to go over to the White House, suddenly I'm in a very important role, the equivalent of a 4-star general within the Pentagon, and so everything got delayed a bit on joining the White House. But I ended up dual hatting starting in April over to the White House, working under Bo.
I don't want to diminish any of this. It's insane. I want you to really understand this guy was a 4-star general equivalent ranked member of the cabinet, would you have, the government. At the same time, he's trying to engage this, Digital Asset Advisory Council and stand it up and then head it up. It's just...
was his deputy, and then officially made the transition to where White House was primary for me. I think back in late summer is when Bo stepped down.
Awesome. Useful to have that context, I think. As we talk today, and I know we only have limited time, but I think one of the things I'm curious about is there's an expression from the Matrix, blue pill, red pill. People who have adopted crypto are on the red pill side. How did you get red pill? What was your introduction to crypto?
I think the first experience was, I had the opportunity to live abroad, live for a year in France prior to going to law school, and the difficulty of having all my assets in a U.S. bank but living abroad just really highlighted for me the inefficiencies in the system. And I remember in my first year of law school, my property professor Kenneth Mack was telling us about the bundle of sticks, that property rights are made up of, and it's possession, control, enjoyment. I'm sure I'm leaving a few out. And I remember thinking to myself,
you got the 3.
Yeah, exactly. I'm sure there's 1 or 2 others. But I remember thinking to myself, is this my money or is it not? If I can't, transfer it to somebody else, then am I really in control if I have to go ask some, central intermediary to basically use my funds in the way that I want to? And, crypto was, very much on scene at the time, but still this kind of, unknown, arcane concept.
I think Brad touched it on crypto in America in the start. Banks are still just starting to get involved in this. We've only had a year of the golden era of Trump. It is going to take some time to really start seeing the acceleration, the dividends paid. And one little side note that I'm really excited about, it's Zach Rector interviewed Kevin Maloney from I Trust Capital, $1.5 billion US under asset and holding XRP. They are exploring yield, so we won't have to liquidate our assets. Cannot wait for that. This Patrick Witt is talking purely on a front of understanding where the value is lying in crypto. It's completely about having autonomy and efficiency and flexibility, and it does offer transparency as well. It's on a public ledger. Anyone can see anyone's account. So, yeah, excited to have someone with this acumen in charge instead of Harry Gensler.
But I knew that it promised a better way and a more efficient way to, enjoy my money and, and spend it or transfer it in the way that I wanted to. And so that was kind of my first introductory moment, and then was a regular user ever since, ultimately leading up to this role here in the White House, where I'm helping shape that policy and helping this industry really achieve its full potential.
So as you think about shaping that policy, obviously there's been a big shift. Give us the report card. How do you feel like, amazingly, it's only been 9.5 months since Trump was inaugurated, as you pointed out. Obviously, a lot has changed. Give us the report card of where we are, maybe the good, and where we still have work to do.
Well, as a former football player, I will say there's always room for improvement. So maybe I'll give us a B+ or an A-, but I will say this administration, it starts at the top. President Trump set the clear vision. He reiterated that the other night on 60 Minutes. We want to make the United States the dominant player in the crypto space, right? We've been the dominant player in... And so he sets the direction, and if he's the owner of the team, let's say, that my boss David Sachs is the general manager, the head coach, and I'm the quarterback on the field, trying to execute. We've done an incredible job of staffing this administration from Treasury, SEC, CFTC, our office, with folks who are pro-crypto, pro-innovation, and want to do everything that we can to, achieve that efficient frontier of regulation, right? The basic rules of the road that allow markets to flourish but not be overly burdensome, and really put an end to the Gensler war on crypto. I'd say the Gensler Warren era on crypto. So, Gensler's gone, but we still have to deal with still dealing with a number of folks that have that legacy mindset. But I would say the administration is pushing every day to move the ball forward and make sure that we're delivering wins, and again, allowing this industry to just do what it does and achieve its potential. The best thing we can do is get out of the way.
Yeah. One of the things you touched on, there's a session at the end of the day yesterday. Stu Already, our chief legal officer, interviewed Rep. Torres, and there's a conversation about why is crypto partisan? I've heard you talk a little bit about this, but tell the audience your thoughts on this has become oddly partisan in my judgment. But I'm curious to hear your thoughts on this.
I think it really relates back to the terrible stance and the terrible place that Senator Warren and Gary Gensler put Democrats in. They turned it into a political issue. They turned technology into a political issue that they thought ultimately was the right way to win votes and win elections.
between the Elizabeth Warren-led freeze, if you will, compared to where we are now?
It really does link back to the regulatory certainty. You've got a bunch of players that are kind of looking at this space, unsure if it's safe to get in the pool, and when President Trump comes along, we pass the Genius Act, in short order, we'll pass the market structure bill. I think it's going to touch off, as you mentioned, already it's starting a wave of acquisitions because there's a lot of traditional players that are, interested in getting into this space, and it's a question of, are you going to build it homegrown? Well, that might be difficult. There's plenty of players already in the space who can be the partner. So you're going to see a lot of JVs, the partnerships that Ripple has, announced and will continue to announce working with others. And then the other, way to get involved in the space is to buy your way in. And so there's going to be a lot more activity, I would say, in the months and years to come.
So I will say, you talked a little bit about the Genius Act getting passed. Huge kudos to your leadership, the White House's leadership on that. I think that I agree, an unlock for the industry for sure. Really the first major piece of financial legislation since Dodd-Frank. So a big deal. If you look back, what are the learnings from that we can apply to the market structure efforts? Like what went well, what could have gone better, and how do we, even frankly the community sitting here, learn from that so that we do a better job and get market structure across the finish line?
I think back to a quote that Luke Pettit, who was working on Senator Hagerty's staff and was instrumental in getting Genius passed. He's now over at Treasury as one of the assistant secretaries there. He gave me some great advice when talking about the market structure battle that we're in right now. He said this bill's going to have to suffer a few near-death experiences before it finally survives the surgery here. So it's never as close as to done as you think it is, but it's also very few of these actual blow-ups are going to be fatal. We need to keep the train moving in the right direction. I would say we are close. We've seen a lot of progress from Democrats, very constructive engagement, especially over the past few weeks. And there will be a number of additional issues that pop up as we drive closer towards the finish line. But I think everyone understands, as we were talking about a moment ago, we're regulating a technology, right? And we're regulating a space that is, for whatever reason, had become partisan, but is really, when we get this bill done and when the crypto industry flourishes, America wins, and Americans, consumers, are going to be offered better products, more efficiently, lower cost. That's a victory for everybody, not just Republicans or Democrats.
Yeah. Does the Ashish, as he was taking us off, pointed out, which I kind of lost track of, we're now in the longest government shutdown.
I think he's about
does that affect some of the work around the Clarity Act, or what has been called the Clarity Act, or just the market structure bill? I'll be more clear about my words.
It has presented some complications, but I would say in other ways it's actually been helpful in a kind of maybe perverse way. A lot of the meetings that senators would be having have kind of fallen off their calendars, and so we've been able to engage with them a lot more and get a lot of time with them and their staffs right now because some of the other issues have kind of fallen away. I will tell you that from our office, I haven't noticed hardly any difference. We're at it morning until night every day, and we're continuing to make a lot of progress during this time. But folks that get furloughed, for example, CFTC detailees that were over on the Hill working on this bill, some Republicans, some Democrats, them being furloughed has set things back in terms of providing that technical expertise. But overall, it's
still moving forward.
Full steam ahead.
Right.
Sorry, camera just cut off.
That might change their posture going forward.
I think it's somewhat of a fundamental misunderstanding of what crypto is, or blockchain rather. Cryptocurrency is one application of blockchain technology, and so Ripple and others that are building the financial infrastructure for this new crypto economy that is built on top of it, view those more as companies, in the crypto space. But blockchain overall, Bitcoin, commodities, there are other sources of value. It's not a monolith, right? There are plenty of companies in the space that are building the infrastructure for this financial future, and pretty quickly they're going to start to understand that Bitcoin is not XRP, is not name your other token out there, and they're depending on the asset manager, they're going to find their places where they want to have exposure. Do they want to be exposed to the companies that are building that financial future? Do they want to be exposed to Bitcoin, Ethereum, others. But I think you'll see that number. I think 50% that aren't exposed to it's going to dwindle. I think year over year.
I think you're absolutely right there. One of the things we hear, and frankly, you have even coached our team, is that there's a lot of people in Washington who still really don't understand crypto. And even as you're just commenting, what are the things that you feel like industry players, whether they be the Ripples of the world and corporates, or even just enthusiasts, what can we do to better bring education to DC? What's advice for us of how we can be supportive of the efforts that you're leading in the White House?
I think it is meeting the members and the policymakers where they are. For folks in the space that are steeped in these issues and understand them, down to the level of nuance that is really encapsulated within them. And then you have, various senators who might be from a different generation or, not as, savvy.
It is kind of age-based sometimes, in my own experience.
It is for sure. But we need their votes too, and we need their policy decisions as well. And so we need to avoid, talking down to those folks or getting impatient with them because they might not be as savvy or fluent in the issues. And, again, meet them where they are, help educate them. They're not going to be cryptographers, and coders, but what does this technology do? How does it compare to existing markets? And really de-risking, the decisions that they're making by introducing, crypto into the financial system because, it's concerning anytime you introduce a new technology if you don't fully understand it. We need to make sure that we are appropriately educating them and making sure that they understand, this is a good thing, and we're putting in place the appropriate safeguards to make sure that it does integrate well into the system.
One of the things I'm sure you have seen, particularly, I think you do have a difficult job in some ways, not just because you have to go champion things on Capitol Hill, but you also are dealing with a breadth of industry. There's still a lot of tribalism in crypto. My own view is that has the trend line there is it's getting better, and that people are more recognizing it's not a zero-sum game and can support the whole industry. How do you deal with the tribalism, and how do you see, what's your own experience in the White House and kind of when that happens, or how do you manage through that? As well as on Capitol Hill, you see some tribalism of elected officials.
For sure. I would say, speaking, for the industry players in particular, I think back to, I don't know if it was apocryphal, but Benjamin Franklin's, quote that we're either going to hang together or we're all going to hang separately. Maybe that's poor, gallows humor there, but folks need to stick together. Yeah, no, that's life or death. But no, understanding that, coming together, no one's going to get 100% of what they want. It's not going to be anyone's perfect bill. It's not going to be Republicans' perfect bill. It's not going to be or policy decision, getting to 80% yes, which is really where the industry is, I feel like, on a lot of these issues. There's a lot more, overlap and consensus than folks might otherwise think. Making sure that they understand that, getting the best deal that we can. There are going to be improvements over time. We're not going to get this perfectly right. If you were, drafting a piece of legislation for the internet in the late 90s, would you have predicted
Man has
everything
a
and gotten
point.
everything exactly
Certainly
right?
not. Yeah.
So
You're not gonna
establish
get
the
it right the
guardrails,
first time.
establish the basic safeguards, achieve that efficient frontier of regulation that allows this industry to thrive and flourish, but leave some play in the joints, because there's going to be a lot of surprises, things that are going to surprise you and me over the next, a few decades here. And so that's the mission, and that would be success with this.
We're running out of time here, but I'll kind of wrap things up with a couple things. One, you are in a very interesting seat. You're seeing lots of things. I think it would have been difficult, as you described, to predict certain outcomes of how the internet has evolved. And the Telecom Dereg Act clearly didn't think of everything, but yet here we are with it. You can, on demand, use a mobile device over IP networks to have ice cream delivered on stage, probably. Sounds kind of good. But I'm curious, make a prediction or two. It could, whether it's policy based, I guess maybe I'll try to put you on the spot and
I'll let you
predict
guys
when will we get a
read
market
the
structure
rest
bill.
of that at your own pace. It's really good stuff from Patrick Witt and CEO Brad Garlinghouse. Just wanted to touch on a couple other things. We may get an ETF on the 13th of November, guys. That is absolutely batshit crazy. So I'm excited for that one. And finally, just wanted to touch base. We've had more wallets in the last 72 hours, 48 hours on the be minted on the XRP ledger than we have in 9 months. So that's excellent. We finally have the 500 million, which is 40 billion valuation. I did a video on that. Let's have a look at the chart. It's bounced up to 232 since the time I've started filming, and bounced down again from 233. So technical glitches. It's in this range. Now I just want to investigate this range here. You can tell that things are pretty scripted, guys. I'm not going to get into too much technical and price chart analysis because it's all hearsay. I'm happy to extrapolate my bare minimum theories on where the value gaps are. It's very easy to just see that you have a lot of action at this particular point. So anything between 237 to 240 would probably be a good target. And you can see that they have this interaction across times. So it doesn't take a real genius to extrapolate positions and then have a punt. I will go into depth about one of my missed entries that I had at $1.59 and $1.80 for the recent drop we had down to $1.59. I missed out. I'm happy to provide evidence. We have SwiftX here in Australia, and my entries were scheduled for some good amounts. I didn't hold on to those positions for various internal reasons in my life, but it's funny. Game is a bit of a matrix, this one. So let's launch into what we're here for. I just wanted to touch on the white paper of Ripple. The asset reserves are based on US Treasury bills, T-bills, with a residual maturity of 3 months or less, government money market funds, overnight reverse purchase agreements, repos, we've discussed that in previous videos, and deposits held at US state or federally chartered deposit institutions. This is the only way in which RLUSD is backed. It is not backed by any amount of XRP. Theoretically, I was talking to my family, you could have, let's say, 100 million RLUSD dollars, right? And then you would have the equivalent to back that. They keep 3% buffer. I didn't actually touch on that in the white paper. They do keep a 3% buffer. So if you had $100 million of RLUSD, you would need of actual US dollar treasury bills or T-bills. That's the way they I don't know exactly where that is, but that was a buffer that I did notice that they do keep on their, there it is, 3% reserve asset buffer, which is great to know they've got that worked into the actual asset reserve. Now, theoretical XRP impact analysis, key data points. I'll be running through this. Feel free to click on the link. It's down in the description for this theorization. If you were to just look at the key data points of Mastercard 2024's total transaction volume of $9.75 trillion, as from Y charts throughout this document, the references will be in blue and underlined. We have 9.75 trillion XRP circulating supply is roughly $60 billion right now, and the current XRP price is $2.34. XRP ETF estimates first year inflows 3 to 10 billion. That's various estimates. I've said 5 billion is quite comfortable where I will sit on that for the next 12 months. we need to do some critical clarification. After we've gathered all the necessary data, we need to do some critical clarification. RLUSD is not backed by XRP. We have two scenarios, a theoretical scenario, but incorrect premise. The first scenario would be, let's say, $75 to $150. That's $100 XRP. For the most aggressive of 30% of all Mastercard settlement of credit settlement adoption of 30%. We will get into the real scenario now. This is a fun scenario to theorize on, potentially one day, maybe. There was a little line here. This is generated through I think ChatGPT or Claude. I do have both. There was a sentence here where it said theoretically, although you've got scenario A and scenario B, the price ranges do overlap a little. Let's get to it. So the reality check is this is impossible because only 60 billion XRP exists in circulation. RLUSD is backed by USD, not XRP. Even 5% adoption would require 3.5x the circulating supply. So this is the real, actual, realistic impact. Let's get to it. Based on real RLUSD mechanics and ETF inflows, here is the breakdown. I will go for the mid-range in all of these. So we have the mid-range of if Mastercard credit settlement was to utilize RLUSD for 5% of its entire volume over the last year of 2024, this is what would happen. So that's 9.7 trillion. Settlement volume would be nearly half a trillion. Half a trillion is 488 billion. RLUSD in circulation would be 488 billion. Daily transactions would equate to about 1.3 billion transactions a day. Burn rate of XRP will be 0.5 million. That's 500,000 XRP burnt daily. Now, a percentage of a supply, it's not even a tenth or a hundredth of a percent, so that's fine. But moving forward, if it was 15%, you could get to a 2%. 0.2% or whatever. XRPL ecosystem growth, 50 plus, increased network activity, 50% plus. Additional DeFi liquidity pools of 2 billion would be provided. XRP locked in liquidity pools would be 855 million XRP. Percentage of circulating supply is 1.42%. And the ETF multiplier effect, this is referencing other things that we've covered in my first video. 5 billion of inflows, a 50x, which is, as you would imagine, I always state this, Zach Rector has done fantastic work, and appreciate Zach, all his work on the multiplier being actually, in this particular scenario, would be a low ball. It would be a higher amount, most likely, than 50x, but we'll just keep it at 50x. 250 billion dollars market cap increase, 141 billion current market cap, and new market cap would be 391 billion from the ETFs. That alone puts the total just from the ETF inflows at $6.51. If you put on top of that the combined effect price, you're looking at a final price target of $8.46 and a current gain from current position of 262% in the next 12 months. That is completely plausible to me. Feel free to read through the documentation and dispute it under your own evidences, own theories, own perspectives. I can only offer mine. And the key insights here, although the original premise would be impossible, you do have a situation where even though without that theory of XRP backing one-to-one, which is a common misconception, the combination of institutional adoption through Mastercard RLUSD and ETF inflows could realistically drive XRP to $6 to $17 within the first year, with potential for $25 hereafter if all factors align aggressively. You've got to think about now the next 3 years of the Trump presidency, the climate that he has extended now, the push and the bipartisanship on these crypto bills, these Clarity Acts, Genius Bill, the Market Structure Bill. It's a changing of the guard in the finance industry. This isn't going to happen overnight. It's been 6 years personally. For Brad, he started his journey in Silicon Valley in 1997, and now he's been with Ripple for the better part of 2 decades. Or, sorry, a decade. He may be at the end of it, better part of 2 decades. The point is, you have a large number of hedge funds, BNY Mellon, JP Morgan, NASDAQ, CME, Chicago Mercantile Exchange, all leaning in on this most current Ripple swell. The next step is to unlock and bring in those banks, bring in the coffers, bring in the large amounts of liquidity that they desire, they need. And XRP has been positioned to do that. It is now officially on the radar of the legislators. It's getting approved. It will be approved. The money is coming through the front door. It's important to remember that all these acquisitions that are happening, for David Schwartz's point, if I buy something that's an account and I pay, this is a great example. Let's take you have $2 billion, right? And you're getting offered 1 billion XRP. That's the unlock, as we know. So we have 1 billion XRP, and JP Morgan are happy to pay for the account that the XRP will be escrowed, released into. Happy to pay 2 billion. By current market today, it's $2.33 an XRP. So you're actually talking about $2.33 billion worth of value. So they're getting a $330 million discount. So that's a theoretical proposition where you've got something that's being bought that will not affect the price of XRP, but it's still changing hands. So that's over-the-counter 101. That's how the big banks will get involved. Yes, then they can dump on the market the next day. I don't think that that's the strategic vision of JP Morgan. Do you? I believe they will hold on to that asset. I believe that everyone can see now, especially when it's announced that XRP is inside the strategic reserve of the United States government, there will be a push forward to hoard like digital gold XRP. And why not? Why can't it become a store of value? It can certainly become a store of value, the same way that Bitcoin is. I'm looking forward to this next little bit of growth that XRP ecosystem is going to have. I'm looking forward to also breaking it down with you step by step along the way. Thanks for tuning in. Please like and subscribe, and I'll catch you on the flip side. Cheers.